You can hear me. Amazing. Thank you and good morning. And thank you very much for joining us today at the West Crypt stage at IFGS 2024. It is our 10th edition and we're super excited to be here. And it's awesome to see a full room. So thank you so much for managing that wind and that rain and for making it through. I am Rashi Pandey. I'm Associate Director of Membership and Growth at Innovate Finance. And I hope that you have enjoyed the first sessions from the old library. There is so much more to come throughout the next 2 days. But right here, right now, we are going to have some brilliant speakers to come over the next 6 hours or so. So here on the West Crypt stage, we're going to be putting focus on real-life AI use cases and spotlighting some incredible demonstrations from technology in action while discussing the wider potential for AI and cloud for the FinTech sector. We'll also be exploring the UK as a global hub in the digital future and putting a spotlight on our friends in Canada as that ecosystem continues to grow. So to do it, we'll be joined by some brilliant innovators, including the likes of Airwallex, Leightonbridge, Google Cloud, Coinbase, Block, and many more. We'll hear from speakers throughout the day here with around a 10-minute turnover between each session. For those of you who would like to explore the rest of the summit as well, we do have 2 other stages. But before we start, I do have to reiterate some housekeepings that I've been told to do. So basically, please do make the most out of IFGS experience by engaging with our online networking platform, Grip. There you'll get full access to our agenda, to our sponsors, speakers, and see what happens when, and most importantly, there is the ability to connect one-to-one for meetings and set that up as well. In the event of an emergency, the fire alarm will not be audible, so please do keep that in mind. But the Guildhall security and event staff will direct you to the nearest exit. I think that's just because it is a bit of a maze out here. So please do follow the instructions if that were to happen. Refreshments and lunch will be served in the Great Hall and the East Crypt across the 2 days. And finally, please do make sure you stick around for the full day and enjoy networking drinks when we wrap up at around 5:30 p.m. today, as well as tomorrow for our 10th birthday party. There's going to be cake, DJ, and a lot more. But right now, you have heard enough from me. I'm delighted to welcome our first speaker to the West Crypt stage today. Professor Markos, he is the Chair of FinTech and Information Systems at the University of Manchester's Alliance Business School. His research sits a cross-section of economics, of digital innovation, financial technology studies, and network economics as we look towards discussing the impact and the use of AI in our sector. And we are really excited to get his thoughts on the role of algorithms as well in adding value to the sector. So Markos, can you please join us on stage? Thank you so much.
Hello, everybody. Can you hear me? Great, excellent. I'll try to fit my computer here as a bit sizable. I won't be using any slides, so this is going to be an old, boring kind of academic lecture. As my students, I'm sure they'll be able to testify. So as Rashi said, my name is Markos. I'm an academic. I work at the University of Manchester, where I hold the chair of Financial Technology and Information Systems, and I'm also directing the Center for Financial Technology Studies, where we study the role of technology in financial services. Now, my background is economics, and as an economist, effectively, one of the themes that I studied throughout my PhD back in the day when I graduated from the LSE was to try and understand the role of technology in financial services sector and what are the economic gains we can get from it. So there's a very particular literature in economics which is called productivity and innovation literature, and actually looks, the contribution of technology in terms of making an industry or the economy in general more productive. And I'm going to start on that kind of positive note and just quote a little bit of research and kind of give a brief overview of what are the potential contributions of AI in financial services and the potential challenges and barriers we see in order to realize these potential gains from AI. I'm not going to say anything kind of too smart, by the way, and I'm sure this is going to be a lot of the things that I'll say you probably have heard of. But just as a summary, before we pass on to the panel, to just highlight some of the things, there are kind of knowledge that is already kind of exists in the industry. What's going to be a little bit interesting perhaps for you, I'm just going to bring in some of the academic insights. And starting on a positive note, we know that there's been a lot of research trying to understand the impact of AI on the economic gains and in terms of productivity, because productivity is something that economists study. And while for a lot of people in business, growth is really important, creating new services and products is really important, and growing a business, in the long-term, productivity is probably the most important thing we can gain as a society, as an economy, as an industry, right? And to testify to that, there's very interesting research. I'm just going to quote one of the papers, or a few of the papers actually, that we very well know as academics. There's a very interesting research by Eric Brynjolfsson, who's at Stanford, and Christina Stevenson, who studied the role of data-driven decision-making, so the role of actually implementing models to try and kind of bring further insights for decision-making inside organizations, and found that there is a solid increase of 3 to 4%, which is consistent across the data of the different organizations that actually used modeling in order to enhance the decision-making. And the same thing, we can find in other papers when it comes to generative AI, which is kind of one of the latest, perhaps, things that everybody's been talking about, specifically also in financial services sector. We're all concerned in this room. This is another paper by, again, Stanford scholars who were trying to understand how generative AI plays out at work. So they took a very big sample of 5,000 customer support agents, and they provided them gradually with Gen AI support tools. And what they found was that on issues to be resolved per hour, the productivity increased by 14%. And what's interesting, this increase in productivity was mainly realized by agents which were quite junior in a sense. We're not kind of very kind of senior agents or very experienced agents. So we know that AI adds to productivity and provides a lot of these tacit knowledge that potentially takes a while to build up and takes a while for people to get there in order to apply that into their line of business. Now, when it comes to financial services, of course, we know that AI can help in a similar way boost productivity, and there's a lot, again, of papers talking about this. There's actually a paper that was recently launched by the Alan Turing Institute on that particular topic, I think, beginning of this academic year, around September, October 2023. By the way, I can share all the references if you're interested in these papers. So they've highlighted, for example, AI can improve decision-making processes, specifically, for example, related to credit assessment or lending or investment. And by harnessing these kind of large kind of data sets that we have these days in financial services, we can pretty much kind of inform decision-making process inside financial institutions. AI models have been used to automate and augment decision-making. This is one of the things that identified. Also, we can see, kind of AI being implemented as part of the automated key business processes in customer service and insurance. Again, when customers have queries, they're trying to figure out, particular things when it comes to products and services, but they're consuming, right? But also when it comes to risk assessment, in order to develop these products and services for consumers. So this is another sector where there's a very particular kind of technology that falls under the umbrella of AI called robotic process automation, RPA, which is increasingly kind of being used in these kind of settings. In addition to that, of course, algorithmic trading and automated algorithmic trading, which makes its own decisions in terms of investment decisions, and portfolio structuring has also been used for quite a while in financial services, and so has improving kind of forecasting decisions, which is something particularly topical nowadays, especially after the Ben Bernanke kind of report that highlighted the need for Bank of England to kind of modernize also its forecasting processes when it comes to decision-making, not decision-making, but forecasting in terms of the kind of broader macroeconomic scope of the country. Fraud detection is another one, and of course, reducing operational costs and also improving financial inclusion have been things that a lot of people have highlighted. Now, to get there, there's quite a few challenges and struggles that, of course, we'll need to face as industry. And, of course, as academics, we're trying to study a bit more and trying to shed some light in some of these, let's say, issues or challenges. One of them is explainability, of course. You all know, and transparency when it comes to AI-based models, right? When it comes to AI decision-making, a lot of people kind of refer to it as a black box process. And the key there is how far do you go in terms of incorporating explainability in your AI models so that you can kind of provide a more transparent setup for consumers, right? And the question is, is a great question, but it also comes at a cost, because the more explainability you're trying to introduce in this kind of modeling, let's say, kind of responsive experience to consumers, the more expensive and slow and inefficient kind of it becomes for the organization to introduce that, right? So there is a trade-off in terms of how far you go with explainability and how much you want to take advantage of these kind of benefits that AI models will be offering in your particular context. So there is kind of a balancing act, and you need to understand what level of abstraction you'll be providing to consumers as well. For that, in that particular context, also there is, the discussion of bias as well, right? This is a very big and important topic. We all have seen, different incidents. Particularly, you may remember the bias that we had from the modeling and credit risk assessment for the Apple cards. So when Apple was accused of being racist in terms of handing out their credit cards, they pointed the finger to Goldman Sachs, who was the organization behind the approval process and developing the AI algorithm. And in that context, there is again a bit of research, which is kind of like the latest thing right now. Perhaps a lot of the academics are looking, which is machine unlearning. There's a team at the University of Toronto, and I think there's a few scholars as well at the University of Warwick, trying to understand how with these kind of large language models, for instance, we don't have to start back from scratch in training with particular data that will not introduce bias, but try and teach the algorithm to unlearn certain things that potentially are harmful in terms of the decision making and introduce the bias. In any level in this process, also accountability is really important, because things, as we know from technology and having studied technology in finance, will go wrong at some point in time. So building an accountability framework is also really important. And I think that also becomes even more challenging as, any kind of technology framework becomes a bit more modular. So for any AI model execution financial services, potentially in the future, as the industry overall, and we have some interesting findings, of course, talking about open finance, but we realize that industry as a whole, in terms of connectedness of different systems talking to one another, become more modular and distributed. What that means is that for any given value chain and business process or implementation of technology that will execute a particular process and give an outcome, we'll have multiple actors acting on this. So the example of Apple and Goldman Sachs could be exacerbated. You could have like 10 institutions contributing to data clearing, structuring of data, storing the data, analyzing the data, providing the models and the algorithms. And as all these things are being packaged, and APIs allow for communication of data and mobility of data, but also communication of systems to act on these value chains, this can be increasingly more and more challenging. So accountability is super important in that context. I'd like to finish, because I think my time is up, just to finish in terms of some things that we know as economists and have studied before, the idea of complementarities. Technology by itself, we've seen never, it's responsible for many of the effects and errors and challenges we see sometimes in industries. There's a lot of other factors that need to work with it. And so complementarities in the economic theory are super important when it comes to technology. Things like, for example, what kind of data in the particular context of AI you'll be using, right? The quality and training of the data, the IT infrastructure they'll be using, the appropriate skills to have in their organization. And that's also important when you think about the managerial skills. One of the big reasons of productivity paradox, as outlined by Bob Solow, who's been a Nobel Prize winner in terms of innovation economics, was that there was not enough managerial skills to manage technology, any kind of application technology in many of the industries that economists have been studying to try and understand productivity effects over the years. But also appropriate skills, and that would be kind of the last thing, I just wanted to mention, we need to train the next generation of people in financial services in a way, and as an educator, I'm saying that with a hint of marketing here, we need to train people, through not just academic programs, but professional development programs to be able to utilize AI more productively in the particular context. And as they're outplaced or displaced, in different jobs inside organizations or other organizations, again, be able to be kind of productive in new roles that it will take up in different kinds of organizations. I'm going to stop here. I'm not going to talk about regulation because I also know that the next panel will discuss a little bit of the legal implications. But thanks very much for listening. I hope this summary was quite useful as a pass to everything else that we'll discuss today. Thanks a lot.